Okay, it's time for the MF Corner on the show, where we address your personal finance queries as well. Our mutual fund expert, Dhirendra, CEO Value Research, joins us as always on the show. Today, of course, Dhirendra, we're putting the spotlight on commodity funds. The global commodity indices are seeing some action again, but what does it mean for international funds investing in global commodities? Afternoon, Dhirendra. International commodity funds have not done as good as equities, over the last year or so. Why is that?
The whole crisis, global crisis, or the shaken outlook has dented the performance of these funds. Also, most of the funds, which Indian investors have, alternatives available to Indian investors, they are pretty narrow. There are very few funds which are, they have done well. The funds with a broader mandate to be in commodities of all kind. But when you have narrower objective, gold, energy and stuff like that, then they have their extreme cyclicality, and that shows in the performance, and it has not been very bright of late.
So what kind of investors are these funds suited for, and what is the ideal allocation? Do you think it's the right time to get into these funds?
I don't know if it's the right time, but surely, a very opportunistic investor, and certainly it will be a meaningful diversification if you have to be into commodities. But we have seen the reversal of the commodity cycle of a kind, and the outlook doesn't seem very bright. So there are occasions when these funds could be very attractive, and it is not meant for mainstream investor who wants to have a couple of funds and invest regularly and build a portfolio, and which a low maintenance portfolio. These funds are not meant for them.
Okay. Thanks for that, Dhiren. But let's also take in some viewer queries. Our first query is from Abhijit Narayan. He plans to invest about 18,000 rupees a month in mutual funds, and he's looking for moderate risk and higher than average returns. He wants to know what funds should he be looking at.
Somebody who is getting started so early and young, and he may not have experienced equity or the turbulence of equity. And the kind of weather we are in, market conditions we are in, it could be quite difficult if he approaches his investment with aggressive equity fund or even an all equity fund. I would suggest that for next 1 year he should just be investing in balanced fund. It will help him achieve with his goal of reasonable return with moderate risk. And after 1 year, then he should think in terms of when he gets used to it, is able to absorb the cyclicality of equity. And that should do his job. So I would suggest him just choose 2-3 balanced fund, and that too conservative balanced fund, and start investing every month.
Our second query, Dhirendra, today is from Ramesh Chandra in Nagpur, and he wants to know if he should consider investing in UTI MNC or UTI Transportation and Logistics Fund for a 5-year time horizon.
Most investors chase performance, recent past performance, and the recent past performance of both these funds has been very impressive, very inspiring. But that is exactly the reason why one should not be investing in them, because things turn around when you least expect it. And if you look at UTI MNC fund, by most MNC, there are 2 MNC funds. They are reasonably invested in pharma, FMCG. Those are the sectors which dominate the portfolio, and which has done very well over the past 3-4 years, ever since we saw the turbulence in the market of the generic kind, the whole overall market. Likewise, the UTI Transportation and Logistics, which was the erstwhile UTI Auto Fund, a similar situation. Past 5-year returns looks very consistent and impressive, but it may that exactly is the reason. It is undesirable to have this kind of concentration in your portfolio. You should have it in very small quantity and try and ride it, and also be ready to have your exit plan as and when your goals are achieved or your return expectations are achieved.